every investor or every trader, when you are investing into the market, you have two kinds of an entry, right? So listen to this very clearly, because this differentiates an experienced investor and a trader and a person who is a beginner, right? So both of them have an intention to earn. But if you're a beginner or a conservative investor and you take a high risk, right, you get a higher return. High risk equal to high return, also equal to high loss. So that equation you should understand. So today what we will be discussing is an entry into a stock, how we can enter during the live market or during the price movement, which should be taken by an experienced investor or someone who have taken few trades in the past and have had an experience, right? Second, we will be discussing about an investor who takes a position after the closing of the stock, right? After the candle is formed, to get more confirmation, right? So what are the advantages, what are the disadvantages also we will be discussing here, right? So let me explain you in terms of mind map, right? In terms of a mind map. So first of all, so we'll be discussing about two types of entries into a stock, right? Into a position. Stock means a position. First position or a first type is entering after the price formation, right? After the price formation, we also call it as closing candle, right? Closing candle. So here, who should take this type of an entry is one, he is a person who is a beginner, or even I would call him as a conservative investor. Also, sir, I have less screen time, right? Less screen time. Sir, what do you mean by screen time? Sir, I'm too busy in my office, right? I'm too busy with my work. I'll not be able to see the chart every now and then, because I'll be in my office work. I cannot regularly track the market, right? So these investors or these traders should follow and entering the stock after the price formation or after the closing candle, right? After the closing candle. And here, what you should understand is your entry would be little late. Yes, right? So after the price is formed or after a very good confirmation on the charts, then you are entering into it, right? So even if the stock price moves ahead, you are entering at a later price, so the kind of a profit what you make would be limited, right? The kind of a profit would be limited because your entry will be little bit late. And what are the pros for it? Even though the entry is late, right, you are entering into a stronger setup, right? You are entering into a stronger setup. We'll discuss few examples also of a case studies. So what I am discussing here, you will be able to understand more deeply, right? So let me repeat. Someone who are entering into a trade after the closing price of the stock, after the closing candle, are like beginners, conservative investors. They have less screen time. They cannot continuously track the stock. Second, your entry would be little bit late because whatever profit you are getting, as your entry is little late after the candle formation, it is limited, right? It is limited. Third, the advantages of doing this is, even though your entry is late, you are entering into a setup which is giving a strong price and a strong volume, right? So you are being in the trend, you're entering into a sector or a stock which is already proven on that particular day, right? So you're entering in strength. And the fourth point to be considered is in this kind of a setup, right? So this is mostly used, even though for an experienced investor, for pyramiding, or also call it as averaging up, right? So what do you mean by averaging up? It means you are increasing your position sizing, right? Which means, sir, I've entered 1% into that position. So as the candle is forming good, I add more, right? So adding more into the existing position, right? Adding more into the existing position or averaging up is the same, right? Or averaging up is the same. Now let me give you few examples, right? Let me give you few examples. So let me share my trading view screen. So let me pick up few examples. I'll be taking RVNL as an example, right? Rail Vikas Nigam Limited. Yes. Now in RVNL, if you look on this particular candle on 11th December, right? It's a candle where a very healthy candle along with a good volume, right? So after this candle is formed, at the close of this candle at either 315, 320, or on the next day, you'll be taking an entry, right? You'll be taking an entry provided you get a green candle on the next day. Or on the same day, 11th December, as the candle is perfectly forming at the closing of the trading day at around 3:30, right? So between 3 to 3:15 or even 3:15 to 3:30, you take an entry here. Similarly, on 21st December, a same kind of a setup, right? Even on 10th January, right? On 10th January 2024, you have a very good price and a very good volume, right? Similarly, your 15th January or even your 17th January, you have seen the same kind of a setup where the price and the volume is forming perfectly, right? Is forming perfectly, right? Even let me give you an example of Mesogon Dock, right? Mesogon Dock Shipbuilders, which is a current example, right? As on today, also, if you look at it, as on today, also, right? So today, the price has been strong, right? So it is a good breakout, also, right? It's a good breakout. Ideally, volume should be much better, but yes, it is average volume for the day, right? And as we have already discussed on this in our earlier discussion, if you wanted to get a better clarity on the volume part, just load your enhanced volume, right? Enhanced volume indicator by Trader Lion. So if you look at it today, the average volume is 1.44 million. Today's volume is 2.3 million, right? So in fact, intact with the average volume. Okay. So in that sense, it's decent. So this is how you take an entry after the candle is formed, right? After the candle is formed. Okay. During the closing time of the market. Now let's discuss a little advanced, right? So what did we discuss now? This is for beginners or for someone who have less screen time where they can't continuously observe on the stock. Now let me go to the other entry, which is entering during the price formation, right? Yeah, entering during price formation, or even I would call it as live candle, right? Live candle. So what do you mean by that? Let me discuss more in detail about this process. So first of all, this kind of an entry, when you are entering into a stock during the live candle, and yes, in our Platinum Council calls, where every month we do a session during the live market, right? At 12 p.m. in the afternoon during the live trading hours, we observe a few charts, right? But those entries should be for investors who are little bit experienced, right? So this kind of an entry, it should be like little experienced investor or a trader who have already traded on charts, right? Who have some comfort, not for the complete beginners, right? Not for the complete beginners. Second most important thing, right? Second most important thing, you should have a little more screen time. Sir, what do you mean by more screen time? You need to observe the chart because you are entering during the candle, maybe at 10 o'clock, 10 a.m., 11 a.m., or 12 p.m. You see a very good, and even we'll go to a little lower time frame, maybe a 30 minutes candle or even a 15 minutes candle. We go through it to observe how is the strength building up there, right? So more screen time means you have to look at the chart more and you have to give more time, right? More screen time, more energy, right? More energy, because here the risk is a little bit higher, return is a little bit higher, and so the kind of a work you do is also a little bit more. Second part of it, right? Second part of it is here you have the probability of profit little bit higher, right? Probability of profit is higher than entering the stock after the closing, right? Or even during the closing, because in the first type what we discussed, we are entering after perfect formation, but here you are entering during the formation or even little bit earlier. Understand in this pattern, very very important. As I said, this is not like a very basic kind of a discussion we are doing. This is a little advanced, right? And even yes, you can go through the recording also to understand it much deeper. Let's say in the first setup what we discussed, you are waiting for a perfect candle to form. Yeah, so yes, so you are waiting for a perfect candle to form, and for this waiting or getting the setup in your direction, you'd be waiting for one or two candles and then you take. But in this kind of a setup 2, right, during the breakout, right, during the breakout, when the stock is consolidating for a very long period, and when the stock is coming like this, when it is crossing its resistance, you enter during this period, right? So same stock in first setup, you enter after the setup is confirmed, after you get a good confirmation. But in the second setup, the same stock you are entering during the breakout. So that's why your probability of profit or the returns what you get in the second setup is a little bit higher than the first setup, right? That's why we need more screen time, right? We need more screen time. And also the advantage here is your stop loss can also be strict, right? Your stop loss can also be strict, which means little lower than the price formation, right? Little lower than the price formation. And apart from this, in this kind of a setup, right, you do pyramiding or you do averaging up after the stock has exhibited strength, right? Has exhibited strength. So as I've discussed in the first process, right? In the first setup, let me open up the first setup. What did we discuss here? Here, yes. So if you look at it, regarding the conservative investor, your entries related, your advantages related, and even on the averaging up, right? What is the averaging up we have discussed? Whenever we get a clear confirmation on the pattern or a clear confirmation on the price is being built up. So after that confirmation, here also we average up, right? Here also we average up after the good confirmation. So please understand, averaging up is not that you pick up a stock and you decide that yes, I will be averaging. No, if the chart is showing that yes, it is building up strength and there is good price and volume coming up, the chart should show you to average up, not that you pick a company and you simply average it, right? The chart should show you. And even here, the pros of it, right? What is the advantage of entering during the price formation is you take a early entry, right? You take a early entry. And yes, you may have a doubt. Sir, yes, I'm taking a early entry, but the risk is high, right? With the risk, you have your reward. You have your stop loss in place. So your risk is mitigating with the stop loss, right? With the stop loss. Now, what I will do, let me give you few examples for it, right? Few examples for it. So let's go back to charts. Now, the same stock, Mesogon Dog, right? Mesogon Dog, this company is consolidating, or its resistance is around 2380 levels, right? Is around 2380 levels, right? Today, it's forming a candle, and even what I would say, you should be able to look at a lower time frame, right? A lower time frame. So when I discuss about the live candle formation, right? Here, as I said, an experienced investor or an experienced trader where we need more screen time, you can also look at a lower time frame chart, which means a 30 minutes candle will give you confirmation about the trade, right? A 30 minutes candle, which means below your time frame, will give you a better understanding about the trade. So let me take examples like, yeah, Mesogon Dog. So this particular stock today, it has given a good breakout with a good formation. And if I look at it in a 30 minutes candle, right? In a 30 minutes chart, right? So on 17th January, 9:15, yes, a very good confirmation, a good breakout, right? Even 9:30, 9:45, again a good confirmation, right? So yes, in this kind of a confirmation, we take a live trade, right? We take a live trade, maybe a 0.5 percentage entry. In the first tranche, when you're adding into a stock where you load 1%, 0.5 percentage can go during the live trade. And whoever have attended our live platinum call in the last session or even the earlier week, we have discussed about companies like JBM Auto, which has given some live entry, right? Even IRFC, when we discussed about live entry, if you just look at a daily chart, right? If you look on a daily chart, right? On 29th December or even your 21st December, this particular candle which it is breaking out, it's a good live entry for the stock, right? Even on 1st January, right? Even on 1st January, even if you look on a 30 minutes candle, during the live trade, you can enter just based on looking on a 30 minutes candle. Even today, on 17th January, if you look at it, right, at 9:15 or even 9:30, even in a falling market, this is exhibiting strength, right? This is exhibiting strength. Even today, one of the live entry you have an opportunity is Wellspun Corp Limited, right? Wellspun Corp Limited, where on daily, if you look at the stock, fundamentally a decent business, debt to equity ratio, right, is at a very, very lower levels. So no problem with the leveraging kind of a problem. And yes, a perfect base formation of almost from November levels and 570, right? Or even I would say 560. 560 is a strong resistance. And today, even the market was not very strong, a good formation. And sir, I've been practicing on the charts, right? I have like more screen time. If you look at live entry today, a strong formation in price and volume, right? During this formation, we take our live trade during the market, right? So you're entering little bit before our resistance for the stock, right? So you add more when on the daily it is further picking up strength, right? JBM Auto, the earlier live entry which we took, a perfect example. When we have taken a live entry here, again with the next candles, it is another entry levels, right? Even today was a good candle, ideally above again 1960, we can further add, right? So pyramiding or averaging up will come after the candle is formed, right? After the candle is formed. Even in the same mesogon example, right? Mesogon example in type 2 of live entry, right? Yeah, mesogon dog. Yes, a good consolidation. Even if I look on a 30 minutes candle, right? 9:15 or 9:45, even again at 10:45, a good formation is happening, right? This is a trigger for us for entry. And your stop loss, yes, you keep a stop loss at 6% or 8% from the purchase price. So even though you're entering a live trade, even if the risk is a little bit higher, you have your stop loss to take care of the risk, right? Of the risk. Yes, just to summarize between both of these discussions, what we had, first of all, as a conservative or a beginner, I would highly recommend enter after the candle is formed, so you're getting a clear setup. But sir, yes, I wanted to enter before the momentum has started, and yes, I'll be very clear on my exit. Any position you are taking during a live trade or even during the live candle formation, make sure you have a very strict stop loss, because you are taking a little early entry. Until unless your exit is not triggered, keep continuing. Even if it is consolidating, you have not taken a heavy exposure, you have just taken 0.5%, and on the closing it's further picking up, you add your remaining 0.5 also on the same day or even on the next day, and as it is building a good candle, you further average up in either of the strategies, right? So closing candle, you need less screen time. Live entries, to capture more points, to enter much earlier, you need more screen time, more time, right? So as I always say, your risk, your returns depends upon how much time you are factoring in, right? How much time you are factoring in, right? So what you can do, just practice more on the stocks. Even though you are a beginner, just look at the type 2, the second way of entering into the stocks. What are the stocks which you would have entered? Just do some analysis, and after you're able to do well in the first entry into the stock, the first methodology of entering into the stocks, after you have got some decent return, take some live entries also, which means before the resistance itself you are entering. One or two stocks you fail, you have your stop loss, you are not losing much, but as you build up, you are entering much earlier and you are riding the momentum, right? Riding the momentum. Okay.